Hi guys, it's Saturday. I didn't do a video yesterday, but it doesn't change much since markets are closed over the weekends. Not for crypto, we'll get to that later. Now, starting with the general markets first, we got the SPY here. Obviously, Friday was a green day, nice strong green day since Thursday was nice and bullish, closed at high of day. Friday, more continuation. For me, the SPY has some way to go until next resistance, let's say about 3% here to reach the descending line. It also coincides with the high up here on 12th of September. But how do you know it's going to get all there? 3% is asking quite a lot. I know everyone's bullish and they think that our CPI data suggests, it's a bit of a pivot. I don't believe that at all. I'll get into that in a second. Let's just say 3% for me is asking quite a lot. Therefore, let's turn to the other markets. So let's look at the Nasdaq. For me, next resistance is also quite a ways away. Now you can see this target also hits the ascending line. That's 5% away. That's asking quite a lot. However, and the SPY and the Nasdaq have been lagging the Dow. The Dow has been the one that's really seen a lot of strength lately, and you can see it took out its descending line already. So for me, the next resistance is the immediate one here, which is about 1% away from resistance. I think it's more likely that the markets hit this area and start to sort of go sideways and lose strength, rather than waiting for the SPY and the Nasdaq to reach their descending resistance over here. So I'm going to be watching the Dow more than the Nasdaq and the SPY for a retracement, and I'm still bearish overall. I'll get into the reasons later. The Russell 2000 touched its descending line, closed below it, so we still haven't taken that out. And the next one is all the way up here, another descending line. You can see that one emanates from this point here. So maybe the Russell can keep going if it's about 1 or 2%, 3, 4. No, that's about the same distance that the Nasdaq and the SPY have to travel. So for me, I'm really going to be watching the sort of the markets when they're 1% up, because I think when the markets are up by 1%, be it Monday or Tuesday, a total of 1%, then I think we'll be maybe getting some resistance in all the markets, because by then the Dow would have reached its next resistance. But otherwise, if the Dow hits that, doesn't sort of fall and keeps going, which I really find hard to believe, we could have a bit of a fake out. Then I'll be watching this descending line on the SPY and the Nasdaq, the equivalents. To me, I find it so hard to believe that it can take that out. I think the market's wrong. Now, the market's been wrong for a while. It's wrong very often, in my opinion. It just takes time for everyone to realize why. My thinking is that, okay, CPI came down. It was less than expected, but that doesn't mean it's going to keep going down. It doesn't mean that where it is now is good enough. It doesn't mean that rates are going to drop. It doesn't mean that QT stops, QE starts. So for me, the markets have to keep going down because the rates are too high. The system can't take it. And in fact, rates will continue to rise just because it might not be 75. And I don't think it will be 75 next meeting. I think it might be 50. Some people think it's 25, but whatever, it's up and it's already too high for the system to endure. So, and not only that, Powell said that even if rates don't rise, even if there's a pause, the pause could last months, a year, and the system can't even take where it is now. So we're a long way away from QE. And I think once the market figures that out, then we make new lows. So what do I think of this bounce? I think it's a gift from the trading gods. I think those people who are in stocks that they don't particularly like, I think now you have an opportunity to sell them, or at least trim the position and look to buy back later. And I mean, again, it was all the asset class. It was risk on for the last couple of days. And it's a big bounce. Every stock's had a nice bounce. I'm talking 10, 20% at least. So I hope you trimmed. I hope you sold. I hope you intend to sell more, maybe even close positions, maybe even start a small short. That's the way I'm going about it. So anyway, markets up strong, could go a little higher. Whether it's 1% or 3-4% is to be seen. Let's look at the VIX. The VIX for me, I mean, I've changed my resistance supports indicators from these circles to targets, but I forgot to do it in the VIX. So you can see I've left my old levels in. We're basically at a level that I identified. The next one is down here. If the market keeps going up by 3, 4, 5%, then I'd expect it to come down here, which would make it a screaming buy, given what we know is going on in the world. I wouldn't be surprised if FIX doesn't go lower, even if the market goes higher. The way it's been trading abnormally and the way that fundamentally, I mean, the VIX should be higher than where it is now already. So even if the market goes up, I think it's a bit of a buy. So that's the market's general outlook on the markets. Let's look at yields. Yeah, here I've got my new indicators. So yields came low with the dollar. Next target is obviously here. You know, it's the last support. I could add that in if I wanted to. This is the 1 year, not too important. But still, you could see the yields have come down a bit. Let's see. Let's see. So that's the 1 year. 2 years come down a bit more. Immediate, well, it's basically touched immediate support. We've broken this sort of, I'm not going to call it very long term, but more significant ascending support. Next one is there, so you can see why I've got those resistance points. But yeah, we've broken that, so should come down a bit more. Actually, I don't expect it to just pop here and go back up. Maybe there might take some time to recover, but it's all dependent on the market too. I mean, this obviously, if this goes up, the market should come back down. 5 years, same thing. It's already taken out its support in 1 day. 10 year, almost identical to the 5 year. This is the most important yield. So yeah, I think, you know, previous resistance becomes support here. So let's test it. This one here would be very, very strong support, in my opinion, just in case this one does fail. 30 year. It's the same thing, generally speaking, you know. So let's see if it goes lower. It might take a bit of time to retest its highs for obvious reasons. And the European yields, all the same sort of thing. The British ones obviously coming lower because they've been in the headlines. And they've been pretty fiscally strict on their finances with the new prime minister, finance minister, etc. So yields have come down. Let's look at the currencies. Where are we? Yeah, so very important. The dollar, everyone's watching the dollar. So as well as the market's going up, the dollar's come down with yields. But yeah, the dollar lost this ascending support, very, very significant. When you lose something this credible because it's hit so many times for quite some time, you know, it stretches out quite a while. You can expect the move to be a bit more extended than if it was just some sort of short-term support or resistance line. So we've come down, we've flushed it really very, very technically strict here. So we flushed it. My first support was 108-ish. We did actually bounce on that first day we flushed, but straight down next day. To me, we should go a little lower. We should go down to 105. Its previous support here. It's also where you have a bit of chop and it used to be resistance, and it's a nice number. So for me, 105. And also we see it was sort of resistance over here, kind of just a bit above. So if 105 fails, 103-ish, around this area, you don't have to be too precise. And then you can see the next one will be here because that'll be the next ascending support. But let's not get ahead of ourselves, even though it's actually come down quite fast and hard. I do expect 105 to provide a bit of support. Plus, it's been a bit too aggressive on the downside. So even if it's destined to come all the way down to 100, you can expect a little bounce from 105. So I'll leave that in as the lowest support zone for now. And obviously, all the currencies versus the dollar have gone up. So the euro, nice and strong. I think it closed around high of the day. Could go a little higher. Should go a little higher if the dollar keeps going down to 105. Likewise, the US dollar, Japanese yen has come down. Remember that 150 mark, very significant. It was defended by the Bank of Japan. So now we've lost this ascending support. Could come down even more, you know, because we've just taken it out. So could come down even more. 130. Let's see if it gets there. I'll leave this in for now. That I expect to have a nice bounce from there. Pound US dollar broke out of its descending line. Next resistance is 122-ish. Let's see, it's been a very strong bounce. But anyway, that was sort of in the headlines every day, so you'd expect a bit of volatility there. So that's currencies. Let's look at commodities. I'm gonna go straight to gold and silver because really that's what I've been trading like an animal the last few days. Look at gold, just very strong, broke out of its descending, very credible long-term line, best chart pattern to play. It was sideways for one day, didn't come down much, which was also quite bullish. Next day just continues straight to its next resistance, hovers there just one day, boom, up again. Obviously, this is with the dollar coming down, the market's going up, but particularly the dollar going down keeps going again. It's getting quite extended here for me. Next resistance is 1800, nice round number. Now, as the dollar keeps coming down, of course, we're going to go over there. I do expect it to stop there, though. I mean, I understand, if the market thinks it's a pivot, the dollar's coming down, rates aren't going to go up as much. I understand that's everything. That's just gold to gold. That's exactly what gold wants to hear. But still, you have to have some sort of, sideways actions, retracement, some healthy drop and retest. So even ultra bulls shouldn't want to see something just go up nonstop. It's not healthy. So for me, I'm looking for 1800, just maybe even just underneath 1790 something. If the dollar keeps coming down, silver actually has been weak relative to gold. I mean, already you can see it's stopped going up as much, but it's just the fact that look, it basically closed where it opened. It closed within this resistance that I mean, who cares the resistance I draw? The market doesn't watch my support and resistance levels, but it's kind of a credible one to me. But even if you ignore this line completely, it really did close basically where it opened, bit of a doji. I could tell it was exhausted. It was red when gold was green. It was going up about the same percentage points as gold, in some cases less, intraday. It's just tired. It's tired. And I think if gold does make a run to 1800, okay, yeah, silver will start going up again. But I think it will basically hover around 22, maybe pop a little bit above with gold at 1800. And then when gold starts to come back down again, silver should be red very quickly. I'm talking about a minus 2-3% day very quickly. And yeah, so I'd watch out with silver. Actually, again, it will be green if gold goes up to 1800, and you could get one nice last bar all the way up to 22.5. That's possible. I should move this up, but I'm talking about a general resistance around here. But I'm going to be selling a decent amount. I mean, I'm always trimming as it goes up because the value of the positions I hold go up too much because I have a very strict value for every stock in my portfolio. I don't want, Barrick Gold to be worth more than 5,000 or whatever. And if it's all of a sudden worth 6,000 and something, I'm taking off 1,000, That's just the way it is for me. That's the way I manage my risk. And to be honest, instead of, let's say it was supposed to be worth 5,000, it's worth 6,000. So I got to sell 1,000. Once we get up here, I'm going to be selling more like 2,000 or 3,000 so that my Barrick position, instead of it being worth 5,000, ideally, it's going to be worth 3. And that means it's now very light, which to me is kind of like me being short because I'm bullish on the gold and silver equities. So being in only 3K in something that I'm normally in 5K, no matter if we're going up or down, is like kind of being short psychologically. So I really want the stock to go down at that point. I would never really go short this sector until I really believe that it's done. And for that to happen, you would need rates to go really up, QE to never happen again. And I'd need to believe the central banks on this and debt to be just being paid off, no more wars. I mean, we're talking about things that will basically never happen as far as I can tell. So that's when I would probably sell all my gold stocks and maybe even go short. But So if I really lighten my position, it means I'm basically going short psychologically to myself. It's like a hedge on myself. So yeah, I think there's maybe 1 or 2 more days in for a bullish move in the gold and silver. Gold hitting 1800, silver hitting 22, 22.5. And then I'm looking for a decent retracement, and then we'll see where it goes. We'll draw the resistance lines once we start seeing that drop. Let's look at the actual equities because that's what I'm trading the most now. Gold equities are stronger. Look at this very bullish hammer. So obviously we've just been going up with the metals, with the general market, and we had a bit of a drop. Not a bit of a drop, but it was red for a lot of the day because obviously we closed here on Thursday, 28.2 at the GDX. I mean, we were red, but what's most important is where we close. We close basically high of day. It makes a beautiful candle. It almost, I'm not going to say guarantee, because it doesn't at all, but it's a very strong indication of a willingness to continue. So if the dollar keeps going down, if the markets are still up a little bit, you can imagine GDX basically going to test 29. Why do I say 29? Because it was support here, here, here. You could say a little bit here, but not really. Point is, it's for me resistance. Now, obviously, 30 is a nicer number, and you do have also support there, and it becomes resistance there. So 29 to 30, I could have drawn an extra line. I don't like to draw too many. I think you just lose yourself, and it's untidy and sort of stops making sense. But if you're selling at 29, it's the same as selling at 30. What's the difference, really? At least you get your fill. Imagine you're waiting at 30 and it hits 29.12 and it just goes down. You miss everything. It comes down 20%. What a loss in opportunity. So GDX, I feel like it could keep going up a little bit here, as long as the metals and the markets are up next week, early next week, hopefully Monday. And I'll be selling because I think that would coincide perfectly with gold hitting 1800, silver at 22 or 22.5. GDXJ, you can see GDXJ has not taken out its August high. Let's say July, August highs, because that was over there. But we're basically going to do that on Monday or Tuesday if, like I've already said, if the dollar keeps going down, if the gold and silver are up, if the equities are up, that perfect trio will almost guarantee that we keep going and we take out basically 35 and maybe even run a little higher. I'll be selling 35. Next level is 37. So boom, boom, that's asking quite a lot, 37, but we could have one last hurrah. And then we'll see, if there's a retracement after that. 35, I don't think will hold because we've done quite a big move. And I think the retracement in gold and silver will be quite heavy. And again, I think the market's going to go down all the way to new lows. So what do you think will happen to the GDX and GDXJ? It should come down heavy, all the way back down to this ascending line. I'm talking about 30 or below. I know a lot of people are very bullish in GDX. That will equal sort of 24, by the time we're down there. If you give it a bit of time, come down about here. I actually expect that. And that would be an amazing swing. Imagine we go a little high on GDX and we come all the way back down to, low 20s. That should be about 20% move. And that is, I imagine you buy back and then you get another swing done. I mean, that's just beautiful trading, and that's better than holding long term, in my opinion. Just trying to collect dividends, because you can still collect dividends. You don't have to close your entire position if it's in a dividend yielding gold stock like Newmont, like Barrick, etc. So for me, you got to keep the big picture, and in my opinion, it's the market keeps going down. This is a beautiful move up in all stocks. I've sold a lot of stock, not just gold and silver trims, but also some general equities that I own, like Meta, Facebook. It's just so many stocks actually just been trimming. And my idea is to close the position entirely in these non-commodity related stocks. I'm just buying them for sort of bounces like we've got now. And then buy back after the market's done another massive flush. So what will happen to the miners? I think it'll come back down. You see a lot of talk in Twitter and all this where people are saying, that's it. The dollar's done. Commodities bull run is back on. And yeah, there is a lot of indication like this descending line breakout that, yeah, it's done. We are going to go up, but what's stopping gold from coming all the way back down to 1680 if the dollar resumes its pump, when interest rates go back up? I really think it's almost inevitable that gold comes back down and goes below 1700. And what's going to happen to GDXJ and the general markets? They'll come back down too. I hope they do, because I'm going to be trimming for that. But for me, if I'm able to nail this move, if I'm able to trim nicely and catch this retracement, let's say we start to hover down here or maybe up there, and then I really catch a big drop and buy back and it goes back up, that's gonna be a massive difference in my portfolio, in my general value. So that's what I'm thinking, and I'm really going to be trading that. I've already trimmed nicely, but I'm looking for much heavier trims. Okay, I'll leave it there. I'm not going to go into the general equities of the portfolio. It was a nice day, some nice moves. I will cover crypto very quickly though, because of the drama involved. Now, I did say, obviously, we've covered this flush. I did say we could bounce back to resistance, which we did. Let's make this a little smaller. 17,500 was the support, which was lost very quickly. And then we retraced. Let's go to the 15-minute chart for this. Okay, yeah, so 17,500 is basically this yellow area. So, we flushed on that dramatic news, FTX, Binance, etc. We retraced. Now we sort of lost the ascending line here. So the retracement's done. Look at this. It really does adhere to technical analysis. Bitcoin is, especially Bitcoin, the crypto markets in general, but Bitcoin really does follow technical patterns very well. So you lose this ascending line, which is to me the weakest possible technical pattern. Flushes down to a new support. Okay, and now we're holding this, loses it again. We just lost it. I think we will basically flush back down to 16,300-ish, whatever, it doesn't have to be too accurate. And it depends what happens. If there's some news or some really bullish news for Bitcoin, I can't really imagine any, then yeah, it'll reverse. But if we keep getting no news to negative news, because I don't discount the possibility of more negative surprise news, whether it be regulation or another crypto infrastructure exchange going down or some coin going bankrupt. If it's Tether, imagine Tether goes bankrupt. That one is very suspicious, and I don't know much about the whole sphere. What else is there? Tether, Binance, people are talking about these big exchanges going down, then definitely a flush. But even if there's no news, I think we go back down to this level and basically go back down and test the lows, because it's a weak chart pattern, and Bitcoin was already weak, generally speaking. It needed something like this, and I just don't see the flush being done yet. All we've done is flushed, come back to test it. And really, when you come back to test a support that's flushed, you've got to go much higher for people to think, oh, that was a washout, that was a fake out. Here we sort of tested it and just sort of kept on going on this weak ascending pattern, lost it, another weak ascending pattern, basically lost it. Okay, with not much volume or conviction, but not exactly some massive pump either. So yeah, path of least resistance, the trend is your friend, and with all the news and negativity, I just think we're going to go back down. And to be honest, if we go back down and test 15,000, whatever it is, 500, chances are we're going to break that too. And then what? And I put in all these lines for some time. Then what? Then we go to 14,000, 12,000, etc., etc. Normally I'd say I'm not going to cover it until we get there, but we could get there pretty quickly. If on Sunday night we're at 15,500, I don't know. The only thing that's saved, and also you got to remember this bounce back to test 17,500, that came with the markets pumping strong. So, and I think the markets are running out of steam in 1 or 2 days. And what happens when the Nasdaq starts to flush back down again? Then it's going to be even harder for Bitcoin to hold off another flush. So we could easily get back down to this 14,000 zone, easily bounce a little bit, come back down, etc., etc. That's what all these lines are for. So watch out in crypto. A lot of people are buying the dip because they're hoping the dip is in, but I'm taking quite an objective, neutral stance, and I think it's not done yet. So let's see. Anyway, good luck, and see you maybe tomorrow before we start trading on Monday.